I don't know what to do with it. Welcome back, Trinidad and Tobago. I'm Hema Ramsden, and this is the Morning Brew. And joining us on set, we have the chairman of NGC Group of Companies, Jerry Brooks, and also Dominic Rampersad, the president of PPGPL. And we're talking a little bit about the latest stock offering that's available. Well, it was an overwhelming response the first time around. Now you have an opportunity to have a stake or have ownership of the country's energy sector. It's an initiative that was started under the previous administration, and it's going to continue into this administration, allowing the citizens to get an opportunity to get involved not only in the running of the state sector companies, but to benefit from the wealth of the energy sector, transforming the wealth from the molecule to your pockets. Good morning, gentlemen. How are you both?
Good morning, Hema. Good morning, Trinidad and Tobago.
First of all, let's talk a little bit about the last stock offering and how it has been doing. We're talking about TTNGL.
Morning, Trinidad and Tobago. The last stock offering, which is TTNGL, has been doing extremely well. If you were an investor in TTNGL from inception to date, you would have earned 25.4% return. 25.4%. In fact, that share has beat the Trinidad and Tobago stock index return of 3.48%. It exceeds all of the dividend yield, exceeds all of the returns on the stock exchange. Here you're talking about the banking stocks. Those banking stocks are between 3.9 and 4.1%. If you take a look at the cigarette stocks with co and so forth, they are in the 4.6, 4.7 range. And if you're talking about other indices like lever, etc., they are in the less than, and the conglomerate sector, they are in the less than 4% range. So the share price has, the share and the stock has performed extremely well from a dividend yield standpoint at 7.1%. It has good capital appreciation. You are buying, when you buy into TTNGL, what you're actually buying into is a $3.4 billion organization that is the lead organization and the lead producer and market of propane, butane, and natural gas in the Caribbean. You're choosing extremely good leadership. It's well recognized and has carved out an extremely good position regionally and hemispherically. And you're talking about state-of-the-art technology. So this is a very robust company with good leadership and good performance.
Now, Mr. Rampersad, looking at the value of the stock, I know valuation of stock is a very complex, either one of you can take it, it's a very complex exercise. What is the value it's going in, and is it the most appropriate at this time?
May I?
Yeah. No, you go ahead, Mr. Brooks.
In terms of stock valuation, the PE on the share is at 15.79%. If you take a look at the share has traded in a range of between $18.50 to $25. When you take a look at the historic value of the share, that's the share price from inception, which was in October 2015, to the current time, the average share value is $21.99. The average share price since the IPO to now is $21.79, and the average price from the start of the year to today's date is also $21.99. So the first is $21.79, the current is $21.99. With a dividend yield of 7.14%, you get an extremely good annualized return. And the share price at $21 gives you a 4.5% discount on the current trading price, the historical mean. So that one, you have an opportunity for capital appreciation. You also have an extremely good dividend yield. And the outlook for this year, we feel, is particularly positive because there are a number of initiatives which Dominic can speak to that we have relative to the underlying asset, which we feel is going to drive share performance and give you not only capital appreciation, but that very strong dividend yield. I should also mention, Hema, that the share has, not only the share, but the company has $403 million in cash reserve. And that $403 million in cash reserve is meant to ensure that the dividend yield of 7.14% can be sustained into the future. In fact, that cash buffer allows us to have 5 years of sustained dividend yield, even at the current earnings trajectory.
And you have been consistent in terms of paying the dividends?
We have consistently paid dividends. You will recall in October 2015, we paid a special dividend initially, and then we've continued to maintain that dividend yield of $1.50. Interestingly as well, the company earns its revenue in US dollars. And what that has done is that in addition to the strong dividend yield, it also gives us that exchange rate appreciation buffer, which translates into about 4.5%. We talked about and we asked shareholders their view. We said, shareholders, would you like to receive the share, your dividend in US dollars? Shareholders overwhelmingly said yes, and so we modified the bylaws at our last annual general meeting in 2016, which allows shareholders in the future to be able to receive their dividends in US dollars. What that means, Hema, is that not only would you now receive a dividend yield or return of 7.14%. In fact, government paper 25 years is going at about 5%, 20-year paper is going at about 4.5%, and bank returns are less than 1%. If you add the U.S. element to it, then your return as a shareholder, institutional or individual, goes up to above 10%. In some cases, it could be as high as 12%.
Now, in terms of the offering itself, Mr. Ramsad, you have an interesting situation. One, the volatility in the energy sector, so people are going to be a little hesitant naturally. And secondly, people are just hesitant to invest on the whole. You have the story of the First Citizen stock. The second offering was not picked up the way it was expected to be picked up. How confident are you that this is actually going to be subscribed in the way that you're hoping it would be subscribed to?
Well, Hema, there are a couple of ways to answer that question. One, Mr. Brooks would have spoken at length on the dividend yield. So the performance of the stock, as well as the performance of PPGPL, the underlying asset, has been exemplary. If you look at PPGPL in 2016, where we had all of the effects of gas curtailments, as well as low energy prices, you recall a year ago, crude oil prices were in the $30 range. PPGPL in 2016 still generated a 15% growth in earnings over the prior year. Now, for a company to do that in those types of circumstances shows that the asset itself is very resilient to these energy shocks that you made reference to. And so the risk that the investors take is really mitigated a lot by, one, the performance of the company, but secondly, the way the company's commercial structure is set up that allows the company, even in the worst of times, to pay a dividend. You know, Q1 last year, in 2016, PPGPL paid a dividend every single month to the shareholders. And so it shows that not only that uncertainty that you spoke about, but even in those periods of uncertainty, shareholders can still expect a return.
When you talk about the performance of the company, it's an interesting dynamic with shareholder control and when you have the possibility of government intervention, involvement, and that is something that you have to quell the fears of the population, Ms. Brooks, and you know that. There's a level of anxiety while the company has performed well, the stock has performed well, there's always an inherent fear.
Well, in this case, government intervention, I have not seen any government intervention. If you go back to PPGPL's history, PPGPL began with a company called ConocoPhillips. And so what we found as a board is a company that looks and behaves more like a private sector entity, internationally respected because of the ConocoPhillips roots. Very strong marketing capability, good cost benchmarks, which we fine-tuned going into 2016 and 2017, and also to good outreach into its markets. So it's a company which has a strong competitive advantage. Its liaison and relationship with NGC does a couple of things. One is that it provides a basis for shared services. We can use the NGC group across its platform in terms of any NGC and Phoenix Park to reduce things like our procurement costs, our insurance costs. In fact, in 2016 and 2017, year on year, we reduced those costs by over 20%, 26% in 2016, and a further 20% in 2017. So that provides a good basis to drive shared services. The second thing that it does is that it allows the company, in the cases of overseas interventions, when we go into Cuba, when we go into Ghana, to provide the full value chain and the full menu of activity. So we could talk gas fractionation, we could talk about participation in the upstream, and then we could talk about downstream in terms of how we work with the downstream. So that arrangement actually works extremely well for NGC and for Trinidad and Tobago in terms of the suite of services and the competitive advantages that the company brings and that the group brings in terms of overseas opportunities and international and emerging market opportunities. So we are very, very encouraged by it. There's a strong governance framework, strong audit committees, strong investment committee, which we rigorously follow. And remember, this is a public company which has to meet the public company standards imposed by the SEC and also imposed by the TTSE and the Companies Act. All of those standards have been met.
Now, we take a short break. When we come back, we continue this discussion a little after the 7 o'clock hour. We're going to talk a little bit about the debt structure and the ratios. Are they all positive? And what are some of the future plans of this company to ensure that you will continue to get value for your investments? Stay with us.